year end?
Well, I think that it has really been since the beginning of June. So I think we had a little bit of two-way price action in May, but since the beginning of June, yields have just been grinding lower, and I think that's why the volatility is being depressed. And I think this is a trend that's going to continue, because the problem is, as I said, is that we've still got unemployment being way too high in the U.S.
I'm placing a new order to buy Japanese yen at 105,643. So order placed to buy Japanese yen at 105,643.
Economic recovery. I'm hearing less and less of that, and I think what the bond market is telling us is that this V-shaped economic recovery is a fallacy, and that it's going to take a lot longer to get back to where we were before the pandemic.
Richard, we're just seeing German July services PMIs come across 55.6. The preliminary number was 56.7, so it's a little under that. The composite is 55.3, and we've seen PMIs, services PMIs now from Spain as well. What do you think about the PMI numbers that we've seen? Manufacturing already out, services coming out now.
I think they're clearly getting better, Matt.
And Richard, by the way, how key is this PMI data for an economist and for a trader like you?
Well, I think it's interesting because there's a lot of forward-looking elements to it, and I think it does reflect sort of the most recent survey responses from those various industries. I think it's interesting because we're seeing a bit of a dichotomy between the actual headline numbers improving and they're heading in the right direction. And you'd expect that given all the fiscal and monetary stimulus we've seen. But despite that, you're still getting firms reporting that they're cutting jobs even as those numbers improve. I've sort of banged on about the job losses a bit, but I think it's critical that we actually get job creation happening rather than job losses happening in order for this recovery to take place, and we're not seeing it from these PMIs yet.
Richard, we're going to have to leave it there, but we'll have you back. Richard Jones, MLive FX and rate strategist, joins us from Berlin. It's a risk-on morning. Good morning. This is Bloomberg.
Beirut is rocked by a massive explosion at its main port, killing at least 100 and injuring thousands. Authorities are yet to confirm what caused the blast. Commerzbank cuts its outlook. The German lender abandons its goal for a full year.
Long on Japanese yen at 105,643.
Surveillance, everyone. I'm Francine Lacqua here in London. The markets have a clear risk-off feeling to them. Now, what they're looking at is a couple of the earnings results. What they're looking at also is the price of oil. Gold actually topping 2,000, so it's interesting because you have gold topping 2,000, but at the same time, European stocks also gaining. So it's a risk-off mood. Again, quite high volatility for the month of August. If you look at the 10-year Treasury yield, it's pretty much steady near the lowest since March. There are signs that American lawmakers are making progress on an economic aid package. Now let's get straight to the Bloomberg. First Word News here in London is Laura Wright. Hi, Laura.
Thanks, Francine. The White House and Democrats hope to have a deal on a new relief package by the end of the week. That's the latest from US Treasury Secretary Steve Mnuchin. The two sides remain far apart on some key issues, but they appear to be moving closer to an agreement. Any vote on a deal likely won't happen until next week. The US and China are planning to assess their Phase 1 trade deal this month. Sources tell Bloomberg that discussions between Trade Representative Robert Lighthizer and Chinese Vice Premier Liu He will take place around August 15th. It comes against a backdrop of rising tensions between the two countries. In the UK, lawmakers are urging Prime Minister Boris Johnson to be more open about the travel risks associated with the coronavirus. In a scathing report, a committee criticised the way ministers talked up an opportunity for a summer vacation, only to reimpose some restrictions without warning. Johnson has promised a public inquiry into the government's handling of the pandemic. Disney is doubling down on its streaming business. Its blockbuster live-action remake of Mulan will now go straight to Disney Plus, bypassing cinemas. It will be a pay-per-view film priced at about $30. The entertainment giant posted a surprise profit for the quarter. The gain was driven by deferring payments to sports leagues due to cancelled games. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now let's get the latest from Lebanon. A warning that the video we're about to show is dramatic. A massive explosion at Beirut's main port has rocked the city, killing over 100 people and overwhelming hospitals. Authorities say it was caused by highly explosive materials at the port, but did not say whether it was an accident or an attack. Well, joining us from Lebanon is our reporter, Lynn Nuhed. Lynn, good morning to you. I know it's you know, the pictures are so dramatic. Do we know what the cause is yet? Lynn, I don't know if you can hear us. Otherwise, we'll get back to Lynn. Sometimes the phone connections are also very difficult. Lynn, we'll get back to you, and we'll hear, of course, the latest of what we know about that blast in Lebanon. Now, car parts giant Continental says it expects a challenging third quarter. The German company plans to save around 25% in investment expenses this year and expects revenue and earnings to fall significantly. Earlier in the crisis, it said it would cut its dividend payout to about 350 million euros. Well, joining us now is Volkan Schaefer. He's the Chief Financial Officer of Continental. Mr. Schaefer, thank you so much for joining us. What can you tell us about how the pandemic will change your company?
Well, the second quarter was obviously very difficult, 40% decline in sales, negative EBIT. The only good thing which we could say at the moment is that consecutively from April, May, June, sales were starting to increase. I can include July there, but still third quarter will be clearly below the numbers which we have seen a year ago. And for the midterm, this is your question, I think, we do expect that the world car production will be for some years clearly below that level which we have seen in 2017. So there is a structural change for some years to be expected before we are back to the old levels of 2017.
When will that be, Mr. Schaefer? Do you have any idea of when we'll get to a more normal market?
Well, probably then the lower level markets will be the normal markets. And as I mentioned, our expectation is it will take 4 or 5 years before we are back to those levels we saw in 2017, 2018.
In the meantime, what happens to the auto sector in general? Will there be more demand from certain countries than others? How do you see that panning out?
For the moment, we do see that China is the region which is recovering fastest. We have had some months where the car production in China was even above the level of the prior year. Some incentive programs on provincial level, on local level, regional level help, but this seems to be the region which is coming best back to type of normal, while Europe specifically and the US clearly in the third quarter still will be below what we have seen in 2019.
Can you give us an update on plans to widen some of the restructuring measures? What exactly are you looking at now?
Well, we are actually taking all the information and scenarios into account, which we are building now for the next years to come world car production, and by that business potential for us. And as I mentioned, we expect this to be below the level we have expected half a year ago only, and therefore we have to adjust our overall cost structure to these new normal development over the next years. Give us some months before we come up with a final view on that and the measures which we will take and have to implement to make sure that we can then grow with the markets in the future on a lower level than we had expected some time ago.
It seems that there's a trend to have more local supply chains. How does that affect Continental?
Stop on profit for Japanese yen at 105.663. Okay, and I placed stop on profit for Japanese yen at 105.663.
And it is much more discussed than we have discussed it some time ago.
Mr. Schäfer, are you considering acquisitions to actually expand what you're doing for connectivity?
We are looking at potential strategic acquisitions in all fields, in all those fields, which could help us to strategically position the group even better for the future development than now. And this includes connectivity, which is a strong growth area in the car, as the car has to get more and more outside information, is doing functions no longer inside but outside on computers and get the information back into the car. Strong growing field, but it is not limited. M&A, potential M&A deals will not be limited to this field only.
Thank you so much for joining us. Wolfgang Schäfer there, the Chief Financial Officer of Continental. Now, coming up later today, we'll get the latest on the pandemic from Dr. Anthony Fauci. Up next, we'll also get back to the markets. This is Bloomberg.
Moving further, my profit to 105.673. Stop on profit, I moved up for Japanese yen at 105.673.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the White House and Democrats hope to have a deal on a new relief package by the end of the week. That's the latest from the U.S. Treasury Secretary Steve Mnuchin. The two sides remain far apart on some key issues, but they appear to be moving closer to an agreement. Any vote on a deal likely won't happen until next week. Well, joining us now is Ian Shepherdson. He is founder and chief economist at Pantheon Macroeconomics. Ian, always great to catch up, so thanks so much for coming on Bloomberg Surveillance. When you look at the steps that we're making towards a stimulus in the U.S., how important is it that we get something sooner rather than later, even if maybe the amount is, comes short of some expectations?
Yeah, well, remember the enhanced unemployment benefits, the extra $600 a week that have been given to about 30 million people since the pandemic began. They expired July 31st. So right now we are in, well, it's an interregnum at the very least for an awful lot of people who've been relying on the money to pay the mortgage, pay the rent, make the car payment, make the credit card payment, buy food, everything. So without those enhanced benefits, those people are seeing an enormous cash flow drop right now. And so it's imperative that Congress gets its act together before the recess, because they're supposed to disappear for 3 weeks on August 10th, in order to restore at least some of that money. I think even Democrats don't expect to see a full restoration. There's going to be some reduction. But the Republicans wanted to cut the $600 a week to $200 a week, and that's too low. So I'm expecting we'll eventually get a compromise. The sooner the better, really.
Will the compromise be enough to keep the U.S. economy afloat, Ian, or do you have concerns that actually, there'll be some real blind spots?
Well, there's already clear evidence of a flattening, but the flattening that we've seen in most of the short-term indicators is probably simply a reaction to people, or a consequence of people choosing to stay home more in the southern and western states that have been hit hardest by the second wave. What we're scared of now is something different, and that would be a step down in spending because of the end of the enhanced unemployment benefits. And it's worth about 3.5% of weekly GDP. So it's a big chunk of the economy to lose, because so many people have been getting this benefit. As I said, it's about 30 million people. So almost 1 in 10 Americans have been getting this, and it's just stopped dead. So it would make a material difference. And potentially, if it persisted for more than a couple of weeks, it would transform that sort of flat trend in the real-time indicators into an unambiguous downward trend, because there's no way we can find 3.5% of GDP just from nowhere. And so this is why Congress is now so motivated. I mean, both sides realize, apart from perhaps some of the wilder fringes of the Republicans, that they have to do something. The election's only 90 days away now, and to allow the economy to fall into another hole entirely unnecessarily just doesn't make any sense. So I do expect a deal, but getting there is really painful.
Ian, depending on the kind of deal we get, who will people blame for it if it's not enough? And what does that mean for the U.S. election?
Well, usually the principle is that whoever's in power gets blamed when things go wrong. And I think that's what's focusing Mitch McConnell's mind very clearly now, is the idea that Republicans, they're already in trouble in the Senate. And of course, we know that Trump is behind in the presidential polls. But what McConnell really cares about is the Senate. And Republicans are really terrified now that something they thought was safely theirs is slipping out of their grasp. And I think he appreciates that they'll be the ones who take the blame. Because remember, the House has already passed a $3.5 trillion relief bill back in May. And the Republicans do look rather negligent, having sat on that for 2 months and done nothing, thinking maybe that a second wave wouldn't happen and it wouldn't be needed. But the second wave is now blindingly obvious. And so everyone knows that something needs to be done. But they've left it very late. And with the recess coming and about 20 Republicans, as McConnell has said, resistant to doing anything, he's going to have to do a deal that reaches across the aisle. And that's very difficult. Splitting your own party is very difficult. But I don't really think he's got a choice at this point.
Where will we see the biggest scarring? Unemployment or consumer spending?
Well, I think we'd see it first in the consumer spending numbers, because we get a lot of data that's almost real time now, that all these things on restaurant diners, and we get weekly chain store sales, we get weekly hotel data, we get daily air travel data. So we've got a lot of signs it can tell us pretty much immediately where the spending is being cut. But of course, the consequence of that will be that if we see a sustained drop in spending, then hiring will drop as well. Now, right now, to be truthful, nobody really knows what's happening to payrolls and unemployment because the data are so contradictory. We've got surveys going up, surveys going down, and surveys going sideways. So pay your money, take your choice. But whatever the position is, it will get worse if there is not another stimulus bill. There's no question about that.
Ian, very quickly, what happens to dollar in all of this?
Well, I think the weakness probably persists a while longer yet. You know, a country that's suffering from a horrible second wave of COVID and is about to do a lot more stimulus is probably not a country that has a strong currency. So with Europe doing better, my guess is that the dollar is likely going to be under a bit of downward pressure for the foreseeable future. But I don't see this as the end of King Dollar. The dollar is still the reserve currency for the world. That's not going to change.
Ian, thanks so much. Ian Shepherdson there from Pantheon Macroeconomics stays with us. Now let's get back to the latest from Beirut. Joining us now, we hope, from Lebanon is our reporter Lynn Nuyed. Lynn, if you can hear us, what do we know about the cause of the explosion?
Hi there, I can hear you finally. You know, we're still trying to find out what happened, but the latest is that there were roughly 2,700 tons of ammonium nitrate stored at the port that had been confiscated from a ship several years ago. And what everyone is trying to figure out now is why they were at the port, why they hadn't been sold or auctioned off or destroyed or, you know, moved elsewhere, and why such a large amount of explosive material was being kept in this unsafe environment. But that appears to be the cause of the explosion, and obviously ammonium nitrate is a component that's used in some explosives, and that basically explains the
Lynn, I think we've just lost Lynn. I mean, we have to understand that, of course, there are, you know, about 100 dead, 4,000 people injured, and the phone lines aren't as great as they were just 48 hours ago. So, you know, we'll get back to Lynn to also try and understand how this Beirut explosion will actually worsen the crises that we've seen in Lebanon. One of the things that we've been talking about quite a lot is, of course, if you hit the port, which is the main point of trade for cargo to come in and out, this could affect also the economy, apart from the loss of life, quite a lot. So we'll get more on Lebanon and those horrible explosions yesterday. Coming up, we talk about banks, and Commerzbank cut its profit outlook amid surging bad loan provisions. We'll hear from the lender's chief financial officer later in the program. This is Bloomberg.
I'm placing my stop on profit for Japanese yen up, moving up to 105.693. Okay, it will give us 500 pounds in profit.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the US and China are planning to assess their Phase 1 trade deal this month. Sources tell Bloomberg that the discussions between Trade Representative Robert Lighthizer and Chinese Vice Premier Liu Hu will take place around August 15th. Now, it comes against the backdrop of rising tensions between the two countries. Joining us now is Ian Shepherdson. He's founder and chief economist at Pantheon Macroeconomics. Ian, we were talking a little bit before about the stimulus and some of the concerns about jobs and when things get more back to normal in the U.S. There's this added layer of uncertainty given that there's a fight with China, which is not only over trade. How much does that hurt the world economy and the U.S. economy specifically?
Well, it was hurting long before COVID struck. We'd seen real disruptions to trade flows. We'd seen uncertainty raising costs for businesses. We'd seen businesses having to find new supply chains because they became worried about their Chinese counterparts, or simply because it was costing them too much via tariffs to use China to source parts and equipment and supplies. So we'd already seen substantial disruption. You could see that in the business surveys. You could see it in the employment and production data. It was a real drag. And then on top of that, of course, COVID has just exploded everything. But once COVID goes away, the China trade war will still be with us. Now, of course, that depends on timing, because if there's a COVID vaccine at the end of this year and then Joe Biden's president in January, I think we'll have a very different US-China relationship in the new year. If Trump is reelected, then I expect that the trade war will just drag on endlessly. But it's really tragic because it's just an act of self-harm from the US perspective, because Americans are paying the tariffs. No matter how many times Trump says China's paying it, Americans are paying the tariffs. So effectively, it's a tax increase on the one hand, at the same time that the Senate and Congress is throwing money at the economy effectively to try and limit the damage. So what one hand is giving, the other hand is taking away. The stimulus, of course, is substantially positive in net terms, but the China drag is just a completely unnecessary hit on an economy right now that just doesn't need it, that's for sure.
Ian, if you look at the Chinese economy, does it seem, the figures that are slowly coming out points to an economy that's getting back on its feet. Is there anything that makes you worry longer term?
Well, China, it definitely is getting back on its feet. China dealt with the COVID outbreak much earlier, having had it earlier than everybody else. But the numbers are clearly improving across the board. The threats, of course, are a second COVID wave in China on a substantial scale. We've seen little outbreaks, but nothing very serious so far. That's a threat that hangs over everyone until there's a vaccine. And then, of course, there's the longer-term picture in China, which is essentially a story of excessive debt. And a banking system that ultimately will struggle under the weight of that debt, which is already dampening growth and dampening future productive potential, coupled with very unfavorable long-term demographics. It's very easy to build a medium-term bear case for China. But of course, markets talk a lot about the medium term, but they exist in the short term, and the short-term picture is still, I think, pretty China favorable.
Ian, if we have rampant inflation around the world, given all the stimulus, where do you see it first? I don't think we will get actually inflation.
Yeah, this is a question that is sort of bouncing around. Everyone asks it. No one really has the answer. The only thing I can say for sure is that we've seen an enormous increase in the money supply everywhere across the world because of the huge increase in public debt required to finance the stimulus. And when the economies normalize, which will be after a vaccine, so maybe early next year, middle of next year, then all that increase in the money supply will still be there, floating around. Now, you don't have to be a monetarist to think that if you've increased the money supply by 20%, which is roughly what the US has done, for example, then sooner or later that's going to create some sort of inflation somewhere. And I would look for it first in the US, but not yet. This is a story for next year, I think, at the very earliest.
Ian, thank you so much. Ian Shepherdson there from Pantheon Macroeconomics. Coming up, we talk about the Bank of England and more monetary easing. This is Bloomberg.
moving up again. My stop on profit for Japanese yen to 105,713. So if it will reach this level and the price will be executed, the profit will be £700. Hopefully everybody understands, yeah? Okay, let's see.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. A massive explosion has rocked the city of Beirut. We warn you, the video we're about to show is dramatic. The blast erupted from Lebanon's main port. It was so powerful, it blew out windows across the capital and was even heard from Cyprus. The latest casualty figures are over 100 dead and 4,000 injured. Authorities say it was caused by highly explosive materials at the port, but they did not say if it was an accident or an attack. The US is planning the highest level visit to Taiwan since Washington cut ties more than 40 years ago. Health and Human Services Secretary Alex Azar will lead the delegation. It will discuss the global response to the pandemic and deliver medical supplies. It's the latest signal of US support for Taiwan in the face of increasing pressure from Beijing. China views the island as part of its territory. The question for any deal to buy TikTok's US operation is, how much are they worth? Analysts have pegged the value anywhere from $20 billion to $50 billion. Microsoft has just 6 weeks to work out a deal that satisfies both the Chinese parent company ByteDance and the Trump administration. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
I closed my position on Japanese yen at 105,713. Have £700 in profit.